Metro Vancouver's condo market continues to soften as sales decline, projects are stalling, and developers hitting pause. The Greater Vancouver Realtors Housing Market Report says the current market continues to favor buyers.
According to the Canada Mortgage and Housing Corporation, about 2,500 newly built condos are sitting empty and unsold in Metro Vancouver right now. That number has doubled from last year. And here's what makes this different. The president of Vancouver-based developer Rennie just went public, saying the last time they saw this level of unsold inventory was 24 years ago. Downtown Vancouver condos dropped from $1,264 per square foot in the first half of 2024 to $1,206 in the same period this year. That's a $58 drop per square foot. If you're looking at a 700 square foot condo, that's over $40,000 in lost value in just 1 year. The average condo price fell to $710,000 in December 2025, down 5.3% year over year. And condo sales? They collapsed 23% compared to last year. This isn't just a slowdown. The numbers tell a story of a market that's fundamentally broken. Let's break down what's actually happening. Here's the situation on the ground. Metro Vancouver is drowning in unsold condos. The Canada Mortgage and Housing Corporation confirmed 2,500 units are sitting vacant and empty right now, and some industry projections suggest that could hit 3,500 by year-end 2025. These aren't future projects. These are completed buildings, ready to move in. Nobody wants them. And McMullen, president and CEO of the Urban Development Institute, told CBC News in October 2025, "There's a potential storm coming, and it's frightening." She said some companies are already laying off staff. Greg Zayati, president of Rennie, explained the market slowdown started back in March 2022, but over the last year, it's gotten very real. He said the real estate industry had a really good 20 years, but the decline in new condo sales is now creating big ripple effects in the labor market. The unsold units are heavily concentrated in Burnaby, Coquitlam, and parts of Surrey. These areas were supposed to be the growth zones. Developers bet big on them. Now they're stuck. Real estate agent Oleg Galyuk with Royal Pacific Realty said older condos tend to sell better than pre-sale condos. The new inventory just sits on the market. The layouts don't work. There's not enough parking. And developers are throwing out desperate incentives. Free parking stalls, storage lockers, cashback on completion. In some cases, they're even offering flash sales with discounts of 25% for a limited time just to move units. But here's the problem. Developers don't want to sell at a loss. And buyers? They're not biting. For years, Vancouver's condo market ran on investor money. Small units, 450 to 500 square feet, were designed to maximize price per square foot. They weren't built for people to live in. They were built for investors to rent out. But the investors have left the building. According to market data from October 2025, investor participation in Vancouver's condo market has collapsed 86% from peak levels. That's not a typo. 86%. Investors used to make up 50% of buyers. Now they're down to just 7%. Why? The math stopped working. Between 2022 and the first quarter of 2025, condo sales in Vancouver fell 37%. In Toronto, it was even worse, down 75%. High interest rates increased carrying costs while rental income stagnated. According to CMHC, carrying costs in Vancouver grew 29% since 2022, but average rents only increased 12%. Translation: investors are losing money every month. Patrick Condon, professor at the University of British Columbia, said Vancouver's housing market troubles are part of a global phenomenon. It has little to do with demand from local wage earners seeking homes and everything to do with the global downturn in the investor market. The end of ultra-low interest rates killed the investment appeal of small condos in central city high-rises. With flat or falling prices expected, investors redirected their capital to other opportunities offering better returns. Now developers are sitting on thousands of units that were designed for a buyer pool that no longer exists. If you're finding this breakdown helpful, make sure to subscribe. We're tracking housing market trends across Canada with real data and real analysis. No hype, just facts. Hit that subscribe button so you don't miss what's coming next. Here's the brutal reality in McMullen laid out. We can no longer build what people can afford. Construction costs have skyrocketed over the last decade. New condos are now out of financial reach for an estimated 80% of local residents. And developers can't lower prices without taking massive losses. McMullen said the market had been absorbing escalating costs for years, rising labor, materials, everything, because industry professionals expected prices would keep rising. But that didn't happen. Now she's blaming government policies at all three levels that have increased the cost of building. The City of Vancouver's 2025 budget includes a 3.9% property tax increase and an 18.2% hike in utility fees. That's hundreds of dollars in annual expenses for owners. Add in mandates for non-market housing quotas, energy efficiency standards, and public art requirements, and the cost of building has exploded. Some developers are lobbying Vancouver to ease its social housing requirements, specifically the mandate that 20% of new rental or strata towers around transit hubs be dedicated to affordable units. Tony Hepworth, president of Penny Farthing Development, said other municipalities have already started dropping their requirement from 20% to 10%. But here's the disconnect. Buyers want 800 to 1,500 square feet for between $800,000 to $1.2 million. What developers are offering? Studios and one-bedrooms under 600 square feet at prices that still don't make sense for most people. Zayati said they need to get to a point where they can deliver inventory at $700 to $900 a square foot. Right now, new developer-owned condos are averaging $1,206 per square foot downtown, while comparable resale units are trading at $867 per square foot. Nobody's paying a 39% premium for a brand new shoebox. This isn't just a condo problem. It's becoming an economic crisis. In the third quarter of 2025, 10 condo projects with a total of 2,499 units were canceled across the Greater Toronto and Hamilton area. The year-to-date total? 18 projects and 4,040 units canceled, already surpassing the previous record high for cancellations in 2018. While those numbers are from Ontario, Vancouver developers are facing the same pressures. Some projects are being paused. Others are entering receivership. Layoffs are spreading through the construction sector. The rental market is also taking a hit. Average asking rent for one-bedroom apartments in Vancouver has dropped 7% over the past year. For investors holding rental condos, this creates a painful squeeze. Falling property values combined with rising mortgage payments as 2020 and 2021 mortgages renew at higher rates. Vancouver benchmark condo prices are now $50,000 less than they were 18 months ago. That's not a minor correction. For anyone who bought at the peak, they're underwater, and the population trends aren't helping. As of spring 2025, British Columbia recorded a net population decline, 2,357 fewer residents compared to the previous quarter. Changes in federal immigration policy are reducing the flow of temporary residents, including international students and foreign workers. The federal ban on non-residents purchasing residential property, enacted in January 2023 and recently extended through January 1st, 2027, has also cut off foreign investment capital that used to flow into the market. Every pillar holding up Vancouver's condo market is cracking at the same time. Right now, active listings in Vancouver stand 35.9% above the 10-year average. Sales in December 2025 were down 12.9% compared to December 2024. The Bank of Canada cut rates 4 times in 2025, but buyer activity remains well below historical averages. Andrew Leese, chief economist for Greater Vancouver Realtors, said market conditions appear as favorable for buyers as they have been all year. But persistent affordability challenges and economic uncertainty continue to suppress demand. Some industry insiders believe downtown Vancouver condos, now priced comparably to suburban Metrotown, represent a buying opportunity. Michael Ferreira, SVP of Finance at Anthem Properties, called the pricing parity flabbergasting given downtown's traditional advantages. But the question everyone's asking is, how long does it take to absorb 2,500 to 3,500 unsold units when sales are down 23% year over year? The honest answer? Nobody knows. Vancouver's condo market is facing something it hasn't seen in nearly a quarter century. Massive unsold inventory, investor exodus, affordability that's broken for both buyers and builders, and economic headwinds that show no signs of letting up. Whether this is a temporary correction or the start of something bigger, that's what everyone's watching right now. The market is shifting faster than anyone expected, and the numbers don't lie. That's why homeowners, renters, and investors are all on edge right now.